welcome to Scrolling with Ceazor. Today is April 8th, 2026. I got some news for you today, but as always, this is not financial advice, just my own biased opinions based on the tweets. So let's start a quick look at the chart. So actually, ETH did pump yesterday after my podcast, and then is starting to retrace today. So you do see it's down 1.5 or 1.7% today, but there's a nice big green candle yesterday that wasn't there when I did my podcast yesterday morning. So a nice little pump, a good volume. That was a pretty decent pump actually. So that's pretty cool. I like that. It's nice. BTC is roughly the same chart on BTC. Gold also has the same pattern as well. Hype also has the same pattern as well. It just hasn't gone into a red candle yet, but same pattern. So everything, all the major assets pumped quite nicely. I don't track the S&P, which I probably should, but I just don't track it here on this podcast, and as well as on this account of the TradingView. Okay, so that's that. Let's move into the tweet. Okay, so the first tweet we have here is Liquidity Bold stablecoin has a integration with Railgun. I'm not sure if this is brand new. I don't think it is. I think I recall that they had this a little while ago, but there is a talk at the ETH Foundation, what is this, explained at ECC, of how this system kind of works. You can watch through it. There's just a little clip here, as well as a longer form talk by Nicolas Consigny. Railgun's a pretty cool project. I've had a little bit of beef with them in the past because they don't support the front end like publicly. They kind of depend on anyone to just kind of do this front ends for them. But they do have front ends open, and those are running. But it's a very open source, like cyberpunk. Anyone can kind of contribute type project that offers privacy to it. I do have a video on it that can go into a little bit more deep into it, but there's like one major feature that sets it across from maybe Tornado Cash and stuff like that, and that is there's two. So one is that you can give access to your privacy history to entities. So if you wanted to give it to an accountant or give it to the IRS or something, then you could. Okay, you could grant that access. So it kind of that's interesting. And the other feature is they can support more than one asset. So as you can obviously see, you can send Bold through Railgun. So you can achieve your privacy through Railgun if you are a Bold Minter holder user. Okay, so moving on. Here we have Frax Finance. Frax Finance is, as always, I keep saying it, it just continues to grow steadily. It's not parabolic. It's not insane growth, but it's pretty good. So last week there was a little over 30 million in the staked FRX USD. And this week there's a little bit over 40 million in the SFRX USD. Now, that doesn't necessarily mean a good thing. The APR is still, according to their metrics, still giving out 4.2%. So it wasn't a dilution event, which is nice. But so hopefully, there was 80 million minted, and half of it went into SFRX, and the other half went somewhere else, or even more, right? Or maybe 90 or 100 minted, and only 40 of it went into SFRX USD. So you can check it out. I like. I'm a holder of SFRX USD, and I like the way it works. I feel it's a easy savings account, right? With a decent 4.2% APY. Even if that's not exactly accurate, as long as it's close to it, then you're kind of happy. And you can go to StableWatch and check out the historical APY on this asset, and kind of get a feel of what it's like. Okay, so let's move on. So Beefy's doing something pretty interesting. They're using. I was talking to someone at Beefy the other day, and they've built a cross-chain zapping mechanism that uses Circle CCPT. So it's basically people won't need if they want to migrate from one vault to another vault, they won't need to They won't need to do the bridging manually. It'll just kind of everything will be done in the front end of Beefy, which is fantastic. And Beefy's pretty good for that. Like they've have a long history of producing some pretty innovative and state of the art at the time tech for zapping. I know a lot of projects that want to add zapping to their work or their user flow. They have added using Beefy as their zapper, which is quite nice. Beefy has a long history of producing and doing proper risk assessment. It's another one of those projects that I really like and that I use a lot. I don't use it as much as I used to, but I do still use it. I still hold positions on Beefy, just not as big as before. In the past, they were very liquidity provision. Like you were mostly, it wasn't like single token vaults for the most part. Most of the vaults were liquidity pool positions, and I kind of got out of that a little bit because I didn't want to speculate on governance tokens and get in permanent loss and trading losses and stuff like that and end up with a whole bunch of a token that's worth less. But they do have single vaults, but the one problem I find with Beefy is that you do need to migrate often. So you need to monitor it, and you need to sometimes you'll be in a vault and it'll get deprecated because the yield source will finish or something like that. But so this zapping, cross-chain zapping, is a fantastic way. And the Circle bridge is free. Can be. You can pay to get things done faster, but for the most part, you might end up having like a zap function that kind of gets held up by CCTP because I've bridged with CCTP and I've had to wait 20 minutes sometimes. So I would assume there's a possibility of getting a wait time on these zaps as well. But anyways, you could check it out. I think it's newsworthy and it's pretty cool stuff. Moving on. So here we have a Hey Anon. Hey Anon, I've been talking about these for a little while, and they keep integrating all these different projects and allowing your agent to interact with them, and they're building out the what they're calling the MCP. So now they've added Camino, so you can now borrow, deposit, and repay on Camino, which is pretty cool. There is something that I've been thinking about a little bit, and I might reach out to them and see if they can build something like this for me. Maybe if they do build it, I'll share that and so forth. But let's go on. So here we have ETH strategy is retweeting Ceazor.eth. And what has Ceazor ETH got to say? So ETH strategy, it's ETH strategy, the world's best store of value. So Ceazor has tweeted out something that basically you know who he is. If you don't know who he is, he like hardcore ETH maxi. He loves Ethereum so much, and he's got a simple tweet that kind of gives you like some hopium, so to speak. So it says, in a time of geopolitical instability, shifting world orders, and technological uncertainty, AI, quantum threat, Ethereum stands strong as a bastion of decentralization, security, reliability, and censorship resistance. And powering it all is ETH, the world's best store of value. It's hard to debate like him on this. Like, of course, there are other chains and other bag holders who will be like, no. But everything he's saying here is pretty indisputable. I think it's pretty truthful. Okay, so moving on. Okay, so here we have Hasu, and he tweeted out something that surprised me. Okay, and he says Monad was ridiculed by many for launching with a big incentive program to print vanity headline numbers, as if the strategy had ever worked for anyone. A few months later, TVL transactions fees, DEX volume charts have been steadily grinding upwards, and the token is actually the top performer. As I've said at the time, mainnet launch is not the finish line, but literally day one. So that's pretty surprising to me. I to be 100% honest, I find that to be surprising that they actually are growing still, especially in this market where things are the market is not injecting massive amounts of liquidity from retail and institutions and stuff like that. There is, of course, some institutional money coming in, but I am surprised because when you go on Twitter and crypto Twitter, I'm not hearing a lot of news or a lot of noise about Monad, but it's way better to say, oh, look, its metrics are going up as opposed to its metrics are bleeding out like almost every other L2, right? Or alternative L1. So yeah, if you had some Monan bags, I'm sure you're happy. I don't really have much. I do have some positions, and actually, I think my Monad position's in Beefy. So anyhow, now I'm not sure. I can't remember if it's a Monad token or just some ETH versus USDC or something on Monad or what have you. But anyhow, so there's that. You can check it out. Do a little more digging. Okay, so Zach dropped a interesting tweet today, a tweet thread. So somehow he got access to some North Koreans messaging, and there's a whole bunch of stuff in there. I don't want to go through every little thing because it's a lot, but you can kind of check it out, and it's basically all kinds of stuff about what this this North Korean was talking to people and some of his plans, and some of the tracing of the money that he was able to obtain for his supreme leader. And so here's the cool one. Jerry's compromised device shows usage of Astral VPN and fake personas applying for jobs. Okay, so it shows him applying all over the place for work. So we clearly see that they are doing that. And there is some KYC thing in here as well about he was using an Indian KYC system to say, oh, I'm an Indian, from India, and so forth. So you can check it out. The one thing I'm looking for, and I did message in here, I did tweet in here. I'm does it have any did it leak any information about which projects? I want to know which projects might be compromised by this guy and his team, and which other prominent KOLs or influencers or people might be connected to this. So it's we can flag those people as dead. Of course, they could just spin up new identities, right? But at least those those identities are doxed then as North Korean thieves, as well as projects that might have this risk. Maybe it's leaking that information is kind of bad for the market. Maybe Zach would have reached out directly to those teams if he had discovered that kind of information. Okay, so let's move on. So here we have Rob Montgomery, and he's talking about RWAs and how some of the issues with RWAs and so forth. RWAs coming on chain are difficult because people cannot really leverage loop them because the liquidations are difficult, right? So you won't have deep liquidity, and you don't even in most cases you don't even actually own the asset that the RWA is legally. You don't own the asset that the RWA is supporting. But he's got a plan with Infinify to do this, and basically it's pretty crazy. Basically Infinify is going to act as a what they call it a buyer of last resort. So basically a clearinghouse where they're willing to just, if it can't be liquidated, Infinify will buy it and take on that asset risk. That sounds a little bit scary for me, because we want assets to be liquidated. We don't want them Infinify taking on that quote unquote bad debt, or maybe it's not really bad debt, but you kind of get the point. Instead of liquidating, they're just going to be well, we're going to take on those assets, we'll liquidate them, and we'll take that collateral regardless of if it continues to drop in value. Now, what that means to me is basically Infinify has to do supreme due diligence on which RWA assets they're willing to support and which ones they're willing to take as buyer of last resort. But I do like, I do think this is the pretty much the only way for like real world assets to come into DeFi as a leverage looping type thing. Okay, so you can read this article. Obviously, do a little more info, go a little deeper on this, and check it out. So here we have JFab. JFab is I don't know who this person is. Like I've been following him and stuff, but he seems to be in the past couple of days. He seems to be defending Aave when there's a lot of FUD in Aave in the market with like Chaos Labs leaving and Mark leaving, and is kind of like there's some Aave sadness or FUD going around the market, and he seems to be on the other side of this. Now I don't know why. I don't know his personal reasoning for it. Whether he just loves Aave, whether he's a bag holder, whether he believes. But let's read what he has to say. Okay, so Aave v4 launch is going exactly as planned. Growth isn't being forced. No rushed migrations. So yeah, they're not forcing people to migrate. They're not forcing people to deposit. However, when I did look inside here, and maybe I'm wrong, but I haven't looked super deep, but there doesn't seem to be any capacities or max deposits, like any restrictions on how much assets can go in. So no growth isn't being forced is kind of like, well, yeah, you can say it like that, but it's also like the doors are open and the assets aren't coming in. So that I think it's kind of, he's a little bit wrong to say growth isn't being forced. Like I'm sure if growth was like way more than this, like instead of 16 million on Polygon, 4 million on Avalanche, 11 million on Ethereum. If it was 100, like 160, 110, and 40 million, then he would be like, check this out, like growth is pumping, right? So anyhow, I don't want to like put words in his mouth, but that's kind of what I think when I see this growth isn't being forced. Incentives stay in V3. So you're not even encouraged to migrate, which is nice. I like this. Risk is isolated while V4 matures. So yeah, like only people who understand it and use it and want to support this new system are doing so, because the growth isn't being incentivized, right? And full transparency on rollout. That's awesome. Like everything's immutable, not immutable. Everything's verified and transparent and stuff like that. So V4 doesn't need a hype-driven bootstrap phase. That's part of the people are missing. I agree with that. Like Aave doesn't need to rush this for sure. They don't need to pump this. They already have a massive TVL, and they already are generating more than enough protocol revenue for the team and the protocol to I don't know the politics on whether or not the DAO is getting milked or whether the DAO is getting a substantial amount of revenue anymore. I am not deep into the Aave ecosystem understanding, but that's a question I do wonder, because the DAO seems to be getting, based on the news, like again, it could all be FUD. It kind of does seem like the DAO is getting rugged, sort of, but I don't know. Like that's just pure assumption. Okay, let's move on. So here we have Ceazor. Ceazor has retweeted out something that's pretty kind of weird and scary. So something is off on World Liberty Fund market. Utilization rates on USDI and USDC reached 98 and 92% respectively. WLFI Whales deposited 3 billion tokens as collateral and borrowed the USDC and USDI. So it's like, you can keep reading more, but like it's kind of like, you have to think about it like, if you lend your USDC anywhere, you have to consider the collateral, because some people think of it like, oh, I'm only lending is safer than providing liquidity because they can't dump on me, right? But they can dump on you. Like literally, they can borrow your stable coins, and if they take that utilization to 100%, then you can't get out. Now, if you are a huge whale, a USDC whale lending here, then guess what? you can't get all your money because it's at 92%. You can maybe get some of your money out, right? And then you can basically jack the utilization up to 100%. And then it becomes like a repay. Are they going to repay? Now, these whales, why did they do this? We don't know why they did this, but generally speaking, they do this because they don't want to hold these tokens, but they don't want to sell them either. So they're just gonna like borrow take the USDC away and go spend that and do their life things with that, or whatever they want to do with their dollars, and then just hope that World Liberty doesn't dump to zero, and then they can maybe repay it if it's worth more later. And if it continues to dump, then they'll get liquidated, but they don't care then, right? Like they got their USDC already. So lending markets are fantastic places for people who hold tokens to take that trade. Instead of selling the market and making that commitment right now to sell, they can hold the upside potential and only sell if it goes down in a liquidation event. Okay, so please understand this. Please do your due diligence where you're lending your assets. I'm not saying World Liberty Financial Token is a shitcoin, but there are like various levels of shitcoinery, right? That's why I like Morpho and Silo, because they do isolate. You can choose your collateral, whereas something like this, all your collaterals kind of mixed together and so forth. Moving on. Oh, that's the Zach tweet. I did that. Last tweet today is Protocol FX is telling you if you are paying interest on your CDP right now, every day, every hour, compounding against you, guess what? FX Mint fixes that, flips that. You can borrow FX USD against BTC or ETH. You pay a one-time fee to do the minting, and then that's it. You never pay interest again. So it's a fantastic way if you need to get some money, but you don't want to sell your BTC or ETH, you can consider this route. Now, how much can you do? Can you do $100 million? No, but can you do $1 million comfortably? I think so. Let's do a quick check on, let's just use CowSwap, and let's do FX USD, and let's try to sell it for USDC, but let's not do it on Base. Let's go to Ethereum, and let's go FX USD. Of course, it doesn't like this token here, but and let's go Ethereum USDC, and let's see what so we've got a 100K, and we're losing 0.5%, so it's going to cost us about $20 to swap 100K. A million, it's going to cost us about $500 to swap a million. So that's not too bad, okay? That's pretty good. Now, of course, do some due diligence. Check this again, make sure I'm not suggesting you do this swap, but I'm just kind of doing a quick check. And that's it for today. I hope this has been interesting and useful, and thank you for listening, and goodbye.